Whenever a homeowner is in a difficult financial situation, one of the first questions that will come to them is a short sale right for me? And there's a lot of different factors that go into this type of a decision. The first that I want to talk about is your bank's attitude towards foreclosure. Your bank does not want to own your property. You need to understand that. Banks are not in the real estate game, they're in the lending game. They hate being in the real estate game. It's expensive to foreclose, there's legal implications, it's bad press. And then once they own the property, they have to maintain it, secure it, insure it, and sell it, and they don't want to be in that arena. So your bank would prefer to short sell a home over a foreclosure. What you need to do is to demonstrate to your bank that you have a financial hardship of some sort that necessitates you selling your house. And that's where a good real estate team and a team of attorneys comes in to help demonstrate that to the bank. Some of the most common hardship reasons that we're seeing today are related to income, loss of a job, underemployment, job transfer, military transfer certainly would apply, or increased expenses, maybe medical issues in the family that you're having to cover. Divorce certainly would qualify as a hardship, or in the business arena if you've had reduced income in your business because of the economy or any other factor. Really, any number of things can add up to a legitimate hardship that your bank would consider. So the question then becomes, should I stay or should I go? And we all want to stay in our house. I haven't ever helped somebody that has come to me and said, I'm sure glad that I'm in a position where I can short sell my house. Maybe that'll happen someday, but I'm assuming everybody would prefer to be in a position where their house just works and the payments work and they don't have to sell. When you're considering a short sell or staying in your home and doing a loan modification would be the alternative. You need to look at the possibility of what your bank could offer on a loan modification. Most banks right now, most loan modifications that we are seeing are typically somewhere maybe $70 less than your current payment, sometimes more than your current payment, but within that range. We're not really finding, $700 or $800 reductions in your payment. It's actually almost as common for your payment to go slightly up as it is for it to go slightly down, just depending on how late you are and how many payments have been missed. So if a modified payment that's slightly less than where you're at right now would still be a financial hardship for you, you'll want to consider a short sale as an alternative and to move on, get the house sold, get that negative equity off of your back, begin to repair your credit and get into a situation where you can afford a home later on. If a bank, just one more point about loan modifications, if a bank is looking at your loan modification, the first thing they're going to do is determine how low of a payment they can get you. Then they're going to look at your finances, just like a loan application, tax returns, pay stubs, bank statements, and they're going to decide, could you afford that new modified payment? If the answer is no, you're not getting a loan modification. So on the short sale side then, if you're to a point where you feel like you need to get rid of that equity, you can't afford the payment, or you know that you're going to need to be moving in the next few years anyway, and the value of your home is less than what you owe, then we're looking at doing a short sale. The next natural question then is, what's it going to cost? And can my bank come after me after the short sale to collect the difference between what I owe and what I sold the property for? It should be the goal of any real estate agent, and I'll take a second to say this is always my goal and the goal of my attorneys that work for me, that when your home is short sold, the deficiency, the debt should be fully forgiven, and you should not have to come out of pocket for any expenses. And we're able to achieve that about 98, 99% of the time. And difficult situations, we know up front if there's a possibility that you may have to contribute cash at closing or something like that. Those are typically investment properties, properties where you took out a home equity line of credit and used the money after the purchase. Maybe a property where you're not occupying the property. Now, none of those things mean 100% that you're going to have to pay something at closing or you're going to have a deficiency. Those are just items that we look for and watch out for to make sure that we're working with the bank to avoid that. But if you're in an owner-occupied home, you bought it, you've lived there, you've maintained it, and now you need to sell because of a hardship, chances are you won't have to come out of pocket at closing. As far as the costs of selling, we all know that selling a house is fairly expensive. When you're doing a short sale, we take all of those fees, bundle them together, and ask your bank to pay for all of that out of the proceeds of the sale. So agent commissions, title company insurance, prorated property taxes, city, state, county taxes. If the buyer is asking for some sort of seller-paid closing costs or home warranty or anything like that, we ask the bank to take care of all of that. And I use special addendum in the contract between you and the buyer that says that you are not committed to that contract until you have received the bank's approval letter and agree to the terms. So you never risk getting stuck in a situation with a buyer where you've told them you'll take their offer, but now your bank comes back and says, we need you to contribute $5,000 at closing. You'll be able to decide if that happened, where you want to go, and do we want to go forward or do we want to go back to the bank asking for a better short sale. We also get it in writing that your bank will forgive deficiency and grant you a full deficiency waiver. If they won't do that, then we have another consultation with the attorney and we help you to decide, should we go forward, should we pull back, what do we want to do with this sale. And just on that point also, banks are becoming more and more willing to work with short sales these days. In more than half of the short sales that I'm doing right now, we are actually getting the bank to pay you at closing for cooperating with them. Sometimes they'll call it a cooperation fee, sometimes they'll call it a relocation fee, but anywhere from $750 is common, $1,000 is common, $3,000 is common. We've actually had two that have closed in the last couple of weeks where we got them over $12,000 in cash at closing that they could use for whatever they want. So one other thing that I want you to understand, it is not necessary for you to be late on your payments to do a short sale. Now, some lenders will require that in some specific loan types, but I sell homes for people all the time who have done the right thing by their bank. They've scrimped and saved and borrowed to keep their payment current, and we are able to get the banks to allow you to short sell with a current payment. In fact, I've just had several clients where I've helped them to buy a home through the short sale process and then sell their house as a short sale, and it's worked out great. So hope that these things help. It is a big decision to short sell your house. I want you to always feel free to give me a call, whether you're in Utah or in some other part of the nation. Feel free to give me a call. We'll have a free confidential discussion about your options. I can set up an appointment with an attorney for you to get some legal advice on your situation and get you the information that you need to answer the question, is a short sale right for me?